We have 1.2 months of inventory. That is more than we had this time last year. Basically, for the last 13, 14 months, we've had less than 1 month of inventory, which is extremely low. That means buyers are fighting amongst each other for offers. Median sales price. So all properties in Waterloo Region, Andrew, 850. Median sale price was in April 2022. That is down 12.7% from the highs that was February 2022. So this is condos, townhomes, single family homes, everything lumped into one pile. On average, property is going to sell, or a median sale price is going to be the 850. So that's down just about 100,000 in 2 months. And that's up from the 710K that was 12 months ago. So we're up 19% from a year ago, but we're down 12%, 13% from the all-time highs that was February this year.
Hey everybody, this is Andrew Cox, Andrew Cox REI on social media. I'm hijacking the Canadian Real Estate channel today, and I have a special guest, Zack from Waterloo, who's going to tell us everything you need to know about investing in Waterloo. Zack, how are you doing today?
Yes, sir. Thanks, Andrew. We're doing well here in Waterloo. Thanks for having us back on the channel. For you that have just tuned in, this is the first video you're watching. I'm a local real estate agent and investor in Waterloo Region. And I've actually followed Andrew on social media for a little while now. Fantastic flip tips, very legitimate and real content, not too fluffy, gets right to the point. And that's what we're going to bring here today, Andrew. We're going to go over the Waterloo Region real estate market. I'm just going to get the slide here pulled up. And we're really going to cover navigating a shifting market. Canadian Real Estate Channel asked us to hop on. A lot of the realtor partners are going to be jumping on and kind of discussing how their markets have changed. There's been a lot of changes, especially in the last 60 days. As an active investor yourself, you've started to see that.
Yeah, the number one conversation that I'm having right now is, number of listings increasing, interest rates going up, are buyers running away?
Yeah.
What's going on, and in particular also like what is going on with bidding wars. Hearing certain scuttlebutt that they're gone by the wayside. Is that still happening?
Yeah, those are honestly all great questions. We can't give away everything yet. We'll go through kind of bit by bit. So in this video, guys, if you haven't watched any of them, some of them are market updates. Some of them are also very specific types of deals or types of real estate investments. The purpose of this video, if you're watching, is if you want to know what's going on in the Waterloo Region real estate market, we're going to cover that first. Current market landscape, what to expect. And then in the next 6 to 12 months, what we expect to see happen, some key factors that are going to come into play that you should be watching. And then something that I think is really valuable for people who either are super experienced or really don't have any experience and they're considering either buying, selling, or investing in a property is just general strategies that should apply. The reality is, Andrew, you've seen it in the last 5 years in Southern Ontario, that just the type of real estate markets we're in have changed dramatically. They've gone from, fairly predictable and fairly consistent to super aggressive for the last 5 years. And so we want to discuss strategies that buyers, sellers, and investors can utilize to succeed in a shifting market. These are general concepts. Everybody's situation is different, but I think for those of you that are watching this video, they should at least add some value or give you some reassurance to things that you already know.
Well, and in this game, I mean, adapting is the key. You gotta pivot and shift, because the real estate market, maybe it's not like the stock market and it changes on the daily. But when people are deciding, should I buy now or not? You have to make those decisions based on your own situation, and don't be scared of the market. Just learn from it and do what you got to do, right?
Yeah, you said something really interesting there, scared of the market. And I think just fear comes from lack of knowledge, right? If you educate yourself, you're scared because you don't know. And the more you know, the more confidence you can have. And one thing that we just preach to all of our clients is getting them in a position to move with confidence, whether that's a buy or sell, whatever it might be. Yeah. And then Andrew will also cover deals at the end, deals. So you guys have an idea of what potential flip properties are selling for in our market, what potential duplex conversion properties are selling in our market, and what multi-units are kind of selling for. We'll go over a few that are on the market right now, as well as some that have recently sold. So people who don't have any context for what Waterloo Region is like, you'll leave this kind of video knowing a little bit more about what types of deals and what prices they're going for. Do you like deals?
Yes, I do. Let's get to the presentation.
Exactly, baby. So investor hotlist, guys, we've started this last 2 months with success. If you want to know what types of deals are on our market, these are on market deals. We will send you a hot list of a handful of properties that we think are a good deal and what type of investor they could fit for and why via email every single month. There will be a link in the description of this video, phippsbrittainrealestate.com/contact us. If you want to be like Joey Tribbiani, and I don't mean a mediocre actor on an overrated television show, I mean a rich guy, then you need to be able to find deals. And we will be sending these out via email. They're great for people who are active, but also for people who are starting to learn what Waterloo Region has to offer. So check out the link in the description. But now, the good stuff for what's going on in our market. So Andrew, we'll go through some key market stats as well as how they should give you a little bit of context as anybody who's doing a research on our market or owns property in Waterloo Region. We have 1.2 months of inventory. That is more than we had this time last year. Basically, for the last 13, 14 months, we've had less than 1 month of inventory, which is extremely low. That means buyers are fighting amongst each other for offers, right?
Just out of curiosity, how is, and this is maybe into the weeds a bit, but how is an inventory calculated? Like, how do you know 1.2 months?
Yeah, great question. So it's basically a measure of how many people are purchasing properties and how quickly versus how many properties are coming to market and how quickly. So if lots of properties are coming to market, but they're selling really quickly, it's hard for inventory to build up because buyer demand is taking inventory out of the market. Whereas if lots of properties are coming to market and they're not selling as quickly, inventory will build up. It's basically a measure of how long a market would take to run out of available listings if the demand would be to continue at this pace. So, I put underneath here 2 to 4 months pre-2016. What I mean by this is typically there is less inventory in slower periods of the year. Here in Ontario, Canada, we follow seasonal trends. There's typically less listings available in the winter months. There's more listings available in the spring, potentially the summer or the fall months, depending on the year, right? So we would expect this to be typically the highest level of inventory by time of year. April, May, June, typically the inventory is the highest. As inventory comes up, buyer have more selection, which means prices may or may not go up or go down depending on the market. And we're going to get into prices as well. But this is just an indication that we still have low inventory, but it is coming up. So there's more selection for buyers in Waterloo Region right now. List to sale price ratio. This is an interesting stat to help people who don't know anything about a market get context on what properties are really selling for. In the last year or so, sold data has become more available for the general public, but traditionally sold data was basically only accessible by people in the business or after a property was closed. So if you're looking at Waterloo Region, Andrew, and you're saying, I wonder what this property is going to sell for, on average, properties are selling for 19% above asking price. This was as of April 2022, right? Now, I would expect this to come down a little bit here in May by the end of the month, but historically, your list to sale price ratio in Waterloo Region ranges from 96 to 98%, right? So we have, for the better part of the last 5 years, 6 years, properties have sold significantly over asking price. Now, you have to take that with a grain of salt. I wanted to put this up to give people who don't have context or experience in the market to say, okay, well, if I see a property listed at $1 million, I expect it to sell for $1,190,000 on average. Just stupid example, but a lot of this is due to the way that homes are being listed and sold in Southern Ontario is that sellers will list their property below market value to generate additional interest and more showings, because more showings equals more offers. More offers means higher selling price. That's how properties have been sold for the majority in Waterloo Region for the last 5 years. Whereas traditionally, you stick a sign up on the lawn for $1 million, you're expecting about $1 million, give or take, right? Yeah. So this is good for people who are looking to do some quick math on what they think property should be selling for, but take this with a grain of salt. It can be a misleading number. So I wanted to explain that in a little bit more detail for people that don't have as much experience.
Yeah, it really comes down to what someone's willing to pay for it.
Yeah, absolutely. But also consider that the selling strategies have changed since 2016. So those could skew this particular figure. Good for context, but not the only thing you should look at.
So I just wanted to ask if maybe this is too soon in your presentation, but
No.
are you seeing any signs of the selling model going back to more list at ask price, or is it still the
That is a great question. That is a really good question. We are going to talk about that.
Okay,
Keep that in the
great.
back. Keep that in the back pocket.
Yeah.
We'll talk about that one. Median sales price. So all properties in Waterloo Region, Andrew, 850. Median sale price was in April 2022. That is down 12.7% from the highs that was February 2022. So this is condos, townhomes, single family homes, everything lumped into one pile. On average, property is going to sell, or a median sale price is going to be the 850. So that's down just about 100,000 in 2 months. And that's up from the 710K that was 12 months ago. So we're up 19% from a year ago, but we're down 12%, 13% from the all-time highs that was February this year, just to give a little bit of context. And this is important to note because this will play into the question you just asked, as well as seller expectations and buyer expectations, which we'll talk about. But it's important to know, understand your specific market, understand your specific type of property, understand how they list, how they're offered on, how they sell, and what they actually sell for. The more specific you get, the more you can offer with confidence and the more predictable outcome that you can have. Okay. But prices have come down. And just to make some realtor notes, these are things that we've noticed that have no statistical backing, but trends and observations that we've made in the last 60 days working with buyers, sellers, and investors in our market. And what I mean by that is my partner, Matt Phipps, and I, both of us work with buyers, sellers, and investors. So we get to see all sides of potential deals. What we've really noticed is our luxury markets haven't adjusted nearly as much as other market segments. So you'll still see your, 2-story walkouts in the newer neighborhoods that are less than 10 years old still sell like crazy. Those price points have not come down nearly as much as a percentage as, say, your single detached homes under $1 million, right? Where we've seen the biggest shift is kind of that 950 to $1 million and under single family homes. Right? That's typically where we've seen the biggest shift in how they're sold, what they're sold for, what buyers are doing in that market. And I just put a note here for expectations. And expectations are kind of an interesting thing. Sellers are expecting yesterday's price and buyers are expecting tomorrow's price. And we're going to get into this in more detail, and that'll play into the question you had regarding how properties are being sold with over asking, multiple bids. But the last point here, guys, is motivation equals deals. So where we've seen the most dramatic changes or the most dramatic prices is if there is a motivated seller or if there is a motivated buyer. A motivated buyer will pay the most for a property. A motivated seller will sell it for the least, typically. So think about this. Yeah, Andrew, you go out and you go buy a brand new, beautiful detached home in February because you're expecting, traditionally markets are higher in the spring. You're being a smart buyer. You're thinking, well, it's busy now, but it's going to be more competitive and more expensive in the spring. You buy it in February and the market takes a dive on you. Median price is down 100K. And then you got to go sell the house you want to move from in a different type of market. And there's a lot of motivated sellers that are going to have to do that. They're probably going to have to take less than what they originally wanted because they need to move forward with their other purchase or their other business. Other motivated sellers are estate sales, people selling property for deceased family members, people who are moving for work, for school. Like those are people that need to sell their property and they're at the whim of the market that they're in now. They don't have the option to sell it at a different time. And that's where we've seen a lot of the deals come through. Separations and divorces, business partners selling off assets to split them, whatever it might be. But motivation is where you can find the deals.
I love that motivated seller rather.
Motivated sellers are my favorite, right? They want to get a deal done. And this will come in on the other side of the coin, unmotivated sellers. So that's what our market's really like right now. Just as a general overview, guys, what I encourage is if you have a specific type of move that you guys are planning on making, or if there's a specific market segment and type of property that you really want to know about in Waterloo Region, reach out to myself and Matt. There's information for our contact information in the description. Like Andrew said at the beginning of the video, everybody's situation is different. And so understanding what your goals and your target properties or market are would only allow us to provide more specific information to give you more context. It's just taking that next layer will give you more information and power. And we hop on calls every week from people reaching out from the channel, just asking about specific types of deals or areas in the market, and giving them the context and giving them the information. Really powerful for any of you that are potential investors or considering moving or selling from our market. It's really easy to get lost in either misinformation or misrepresented information. So applying it directly to your situation will help a lot. On that note, key factors, and this is where we'll address your question. So I was talking with Andrew briefly before I got on, and I told him I had a background in economics. I studied economics as my undergrad, but I'm not an economist. So please take this as merely information. Exactly. This isn't economic advice necessarily, but I do take that background and look at these factors critically. I do think they apply directly to a real estate market. Number one, inflation. Everybody's been talking about inflation, interest rates, inventory, and then really the emotions of a market is what we'll go through real quick, Andrew. So inflation. Inflation has gone up pretty significantly. And so central banks are going to have to curb inflation. And in order to do that, they're raising interest rates, right? So if inflation continues to rise, expect interest rates to continue to rise and combat that. And that will impact inventory. For the last probably 4 to 5 years, as interest rates have stayed relatively stable, our market has predominantly been driven by inventory, supply and demand. How many homes are available versus how many people want to buy them. Now, I think that key factors like inflation and interest rates, now that they're changing or there's more uncertainty associated with those important variables, our market is driven more by those factors than they had in the previous years. And what that causes, Andrew, and everybody watching, is buyer hesitation and seller motivations are going to start to shift. And that's part of the reason why our markets have really started to shift. Buyers are going to hesitate because they don't know if interest rates are going to continue to go up. So if a buyer needs to make a move and lock in an interest rate, they're going to buy right now. Whereas if they need to know how the interest rates are going to affect their financial situation, they need to be able to figure out what the interest rate and inflation variables are going to do before they can actually move with confidence. Same thing affects sellers. If they think that inflation is going to continue to increase and interest rates are going to increase, making demand lower for mortgages and buyers will come out of the market, then they may be more motivated to sell now as opposed to waiting for a more favorable market to sell their property in. Right?
Yeah.
So in the next 6 to 12 months, and these are questions that I can put out to the audience and even yourself, Andrew, is what's driving the market? Is it just supply and demand? I think it's a combination of a lot of different factors, interest rates, inflation, and the available supply in our market. But another question I think is really important is how much of those factors are already priced into our markets. Markets have come down in the last 2 months, let's say. Are all of these economic uncertainties and all these variables that we've discussing and we think impact a market, are they already priced into the market? Partially, yes. But I don't think all factors are equally priced into a market perfectly every time. I don't think everything is necessarily going to work out as it's supposed to on paper. But I think that what we can do is we can go through a few scenarios, as a conversation right now, and that I think would be good for any of the viewers to consider to better understand what may or may not happen. The reality is real estate markets do typically move fairly slowly. But in the last few years, they've started to move very, very quickly. As well, real estate is a long-term investment. Where people find a lot of the success is, even flippers, if they're consistently flipping long-term and they're using smart models and they're not overextending, in the long run, you should be very profitable. You'll go through less profitable times and more profitable times. But if you're consistent throughout the long term, you'll find success. Same with people who are buy and hold type investors. Buy for $1 today, sell for $2 tomorrow. That's the idea. And in the meantime, make some cash flow in between. So just note, it's important to understand what you think is going to happen in the next 6 to 12 months, but it's very difficult to say with confidence. And I'll tell you a little story real quick. It's kind of just this, I just remember this, it came to me, was I read after the financial crisis in 2008 that I think it was 11 of the 12 head economists for Bloomberg predicted that 2008 was going to be the best year yet. 11, it was like everyone except for one of the economists was like, yeah, this is going to be the best year yet. No questions asked. And we had a financial crisis. So the reality is that, like,
Well, nobody gets it right.
thank you.
Yeah.
You,
Stop
this,
trying to time the market.
Yeah. And so I think a lot of it comes from the fear. And so educating yourself, guys, if you're watching this video, if you're doing your own research, I think that's awesome. Take that into consideration. I think the more you know, the more educated decision you can make. Just realize everybody's going to have their own opinion, right? We try to follow facts as closely as we can, make the best decisions we can.
And I'll add this, that from an investor perspective, if you're doing buy and holds, as long as you calculate, don't calculate your interest rate at 2%, calculate it at 3%. If the numbers work, the numbers work. So when people say like, oh, should I stop buying? Well, don't wait for the market to come down. Just make sure the numbers work. There's still great deals out there. All of the big guys are buying constantly.
Mm-hmm.
And if you're a flipper and you're worried about, like you said, that if you bought in February and try to sell in March, you're seeing a downturn. But I certainly hope that you're buying the properties at a significant enough discount that all that does is affect your profit margin.
Yep.
But doesn't actually put you sort of upside down on that one. So those are two tidbits that I tell people all the time.
Absolutely. And I think the question, should I buy now or should I sell now? Like, that is a good question. And that is the big question that I think a lot of people watching these videos are going to ask themselves too. But there's so many factors that go into that. So understanding your specific situation is going to be the first thing that we do. If clients ask us that, it's like, great. Okay, well, how much you have on your mortgage? What do you want to do after you sell the property? Why do you want to sell it? How quickly do you need to sell it? Do you have to if you don't get the offers you need, right? These are all things that you're going to want to know before you even decide what you want to do. So I think that's great. I think that's a really good point. And to that, we're going to do a viewer poll, Andrew. Will real estate values be up or down in 12 months in Waterloo Region? If you aren't familiar with the Waterloo Region market, but you're in another market in Canada or North America, leave the comment up, the same, or down in the comments. But if you are going to say the same, don't cop out. You got to give me at least a sentence or two explanation. Like, right, up, I can up or down, you're making a decision. You're on one side of the fence or the other. But if you're on the fence and you're saying it's going to be the same in terms of values, you got to tell me why. That's the only thing I ask for anybody that's going to drop us a comment on this. And we've had some really good comment exchanges. And if people need to have a more lengthy conversation, we can hop on a phone call. But I'm very curious to know what people are going to think and how people perceive it. We've had these conversations with yourself, with other people from the Canadian Real Estate channel, with our clients, other agents, lawyers, accountants, people in the business. And, a little bit of a mixed opinion. Everybody's, people's minds aren't made up one way or another, right? So I'm curious.
I think this is a perfect opportunity for me to chime in here and say, while you're commenting, why don't you hit that like button and subscribe? And if you want to keep hearing this information, make sure to subscribe to this channel. And I'm going to throw in my bet or my comment, which is up.
Okay.
The values are going to go up.
Okay. So we will be at where we're at or higher, or definitely going to be higher?
Higher.
Why is that?
Higher. 12 months is a long time.
12 months is a long time. 12 months is a long time.
I just feel that it goes up over time. If you said next month, then I might have a different answer. But in 12 months, I definitely say higher. And one of the reasons I say that is because of all the conversations, interest rates, this, that, the other thing. I personally feel, take it with a grain of salt, as I am not an economist either, but we are importing citizens through immigration and we can't build fast enough.
Yeah.
So the supply and demand issue has not and will not be addressed by building 1 million houses, as long as we're letting 1 million people in, type of thing.
Yeah.
So,
I've been doing a lot of research, and when I first got in the business, I was like, why can't we have supply? Why can't we just build stuff? It's too time consuming and too expensive to bring units to market quick enough. We talked about it on the channel a lot of times, guys. So if you do have time to go through some of the other videos, we do explain that in a little bit more detail. But supply will continue to be a chronic issue, specifically in Ontario as well. Like, very specifically to Ontario, it's going to be a chronic issue. And you look at the type of people that are coming in too, Andrew. We're the type of people that are coming to Ontario. Educated, have money, or have good jobs so they can make the money to be able to afford the houses.
Yeah, absolutely. And another thing that I was having a conversation recently, and hadn't thought about this, but our population in general is, there's more singles, I think, than there ever has been.
As a percentage of population?
So you get kids moving out of a house, out of their parents' house as a single, not, whereas traditionally, like if you go far enough back, it was always a couple.
Well, you
So
get
now,
married 19, 20, 21, you move into your first house.
yeah, and so now think of it like driving and the need for the HOV lanes, because everybody drives by themselves in their car. And I think the same thing is to some degree happening with the housing market, is that people are buying a house for one.
Yeah.
And so there's more houses needed, right?
And then even to take it a step further, I know we're going off the rails a little bit, but I think this is super important to consider.
Go into the weeds, man.
Sorry?
Let's go into the weeds.
Let's go into the weeds. That's where you find the good stuff, though. So they released a report at the beginning of the year. 23% of properties in Waterloo Region were not owner-occupied.
Wow.
Do you think that percentage is going to go up or down in the next year, in the next 5 years, in the next 10 years? Do you think there's going to be more renters or less renters in the next 10 years? As a percentage of people that live in Canada or in Ontario, the percentage of renters are going to go up. No. Affordability is going down. There's less people that can afford to own property. If they don't own property, they can't live on, they're not all living on the streets. They have to rent. So if the percentage of people that live in Ontario of renters is going to increase, what does that mean? Food for thought, guys. Food for thought. And again, these are just ideas and predictions and things that could happen.
If 11 of the world's top economists can't predict it, neither can the two of us. So just we're just talking here.
We're just two guys shooting the shit. Awesome. So we're going through some scenarios now, and this is for I'm a very visual guy. So when I was in school studying economics, I used to have I was writing like pictures and arrows and stuff. I got to see it. So if inflation goes up, interest rates are likely to go up as well. If interest rates go up, mortgages and debt is more expensive, less people want it or less people can qualify for it, demand will come down. That's the logic there. Scenario one. Scenario two, inflation starts to stabilize. Interest rate hikes that they are currently doing and are going to continue to do that they've set out and planned, that will start to curb inflation. Inflation will kind of stabilize and then eventually come back down to the mean. In that instance, interest rates probably won't increase much more, and demand will return to the market once people figure out what interest rates are going to do and once they figure out that inflation isn't going to keep going up. Other scenario, inflation goes down. If inflation goes down because of the interest rate hikes that we're making, then interest rates would likely stay at where they're at or close to where they're at, and demand would likely stay where it's at right now. If demand stays where it's at right now, real estate markets all over Ontario, specifically in Waterloo Region, will have low levels of inventory and demand will continue to gobble up inventory. Prices will rebound. I think it's probably a combination of scenario one and scenario two that are likely going to happen in the next 6 to 12 months. But like we just touched on, if they don't get inflation under control, that's going to be the big thing that I'm looking for. Inflation scares a lot of people for good reason. So watch those numbers and look to see what central banks are going to be doing with interest rates. I know the Finley guys are talking a lot about this stuff. And I know lots of other people on the Canadian Real Estate channel are addressing this issue in their local market. Doing a little bit of research on your own doesn't hurt though. Now strategies. We'll go through this really quick, guys. I know the video is running a little long. I want to get to the deals, but I think this clip would be really good for anybody that is considering actually buying, selling, or investing specifically in Waterloo Region in the next 6 to 12 months, right? For sellers, we talked about this last video, and when you're selling a property, if it shows well and it's priced right, it will sell. Regardless of price point, regardless of type of market, regardless of location, if it shows well and it's priced right, it will sell. Well, I just put the little hire us there because you could hire us to sell your property too. That would help get it sold, and probably for a little bit more money than most people, because we invest in our listings. Staging consultations, actually staging, good media and marketing to the right types of buyers also helps. But like bare minimum, your property has to show well and it has to be priced right. bare minimum. So sellers, that will always work. Now, Andrew, ask me that question again about properties and buyers, multiple bids.
Oh, what's the strategy nowadays? List low or list at price?
A little bit of everything. so, so there is a lot of inconsistency, and that's why I wanted to discuss buyer motivation and seller motivation. Think about this. You have your property on the market beginning of May, and there's still some properties that are selling close to February prices, but some aren't, right? If you listed your property low in order to get multiple offers, some places are getting multiple offers and selling like crazy, and others just aren't. There is not a ton of consistency in which selling strategies are working and which ones aren't. Whereas 3 months ago, if you list, everybody just listed their property low and it was going to sell in a week or less for 200, 300K over asking price. That was just how our market was. But now we're seeing some buyers say, hey, you know what? Why don't I just kind of wait and see? There's more properties coming up every week. Interest rates may scare some people. I got a little bit more time. I can take my time and shop with it. I'm not as motivated to offer on the first good deal I see. Mm-hmm. So depending on the property, sometimes listing really low is a fantastic option. That's typically, in a shifting market, that's typically what we advise. But that makes a lot of sellers uncomfortable. And some sellers are still not comfortable with having a large volume of people through their home. Now that not everybody's wearing masks, what we do is we request everybody to wear a mask through our seller's property if that's what they want. And if they don't, then we just politely ask them not to come to the home. So I think that if you're comfortable with it, listing low is still a fantastic strategy as long as it's priced well and it shows well. If you list a property super low and it shows like crap, you're not going to get the showing activity you need to get multiple offers. Another really good strategy, if you have a seller that is comfortable having a property on the market potentially for more than a week or comfortable negotiating conditional offers, then listing the property at what you think it's going to sell for and taking offers anytime, it still works. You're being very upfront about your expectations. Where sellers make the mistake is that they are not pricing their property according to their expectations. And what I mean by that is this. You have a property that's worth $800,000, but you list it, I don't know, you're trying to sell it for 800 grand, but you list it at $699 and you hold off offers expecting to sell for, about 800. Great. So you list it for a week, Andrew, and it doesn't sell. And then you just leave the property listed at $699, waiting for offers anytime. Who is going to come view a property listed at $699 that doesn't have to compete with other buyers? Who is going to pay more than asking price for that?
Yeah.
As a buyer, you don't know what they're expecting. I'm saying, hey, come buy my property for $699, but I'm only going to take 8. And there's no other buyers that you have to compete against either. That's confusing. List your property and have a strategy that is actually reflective of what your expectations are. And that's what we encourage our sellers. Everybody's situation is different, but listing low still does work if it shows well and it's priced right. Right? For buyers though, because you are a buyer too, buying flips, we're buying holds. If you guys are out there looking to do research and thinking about buying in Waterloo Region, we have a free buyer guide on our website right now. If you have no idea what you're doing, that's a good start. Go download that. But if people have bought real estate before, having a plan for what your target property is and how they sell is number one. While you do that and your real estate agent helps you, you can get your mortgage financing in order. Because if you go shopping without a pre-approval or without mortgage financing locked down, stop. Please just stop. Save yourself. Please just stop and go get that done. Right? So you got your plan, Andrew. You got your financing ready to rock and roll. View your properties in your market consistently. Your real estate agent has advised you on what they'll likely list for versus what they'll likely sell for, and then offer, right? What I mean by, I put offer there specifically because you will likely have to put out more offers now than you would 2 months ago because sellers' expectations and strategies are all over the place. They're inconsistent. So you may run into people that are unrealistic with their price expectations. But since you have your pre-approval, since you have your plan, since your real estate agent helped you learn your target market, you know what a good deal is and a bad deal is, you can offer with confidence. If it doesn't work out, you can move on and repeat. But if you have your plan in place, you're pre-approved and you're frequently viewing homes, you will know your market very well within a few weeks. That's where you can move with confidence and get a good deal, right?
Yeah, and being ready is definitely key. You got to be able to strike while the iron's hot. I mean, this real estate moves quickly overall, but moves very quickly in the sort of transactional.
It does. Very much so. And being prepared allows you to make those quick decisions without feeling that you're being rushed or pushed or that you're making a mistake. So having the plan in place is super key. For investors, guys, cash flow. And I should have put it on here, margin of safety. If you guys are flipping and you think there's more uncertainty, just make sure the deals you're buying give you an additional margin of safety to account for the additional risk you may be taking on. If you're looking for holds or burrs, make sure the cash flow supports the debt that you're going to have to use to service. If you're investing in cash flow, you can weather down markets a lot easier than people that aren't cash flow positive. And in our market, there are cash flow positive properties. In our market, there are flips that present a generous margin of safety. So please, I just encourage people, if you're investing, get your strategy locked down, but cash flow is king. A margin of safety for flips, also king. You need to have these things. If you don't, that's where people make mistakes and lose money. Number one rule of investing is just don't lose money. That is the number one rule. So that's just something I really wanted to encourage is cash flow positive properties are still available and they are going to help you weather the storm. Oh, now we're going to get into the deals, baby. We're going to get into the deals. Exactly. Nobody can help themselves. As soon as they see this meme, they're like, oh yeah, let's do it. So if you guys want the deals, link in the description, investor hot list. Some of these we sent out to the investor hot list, and some of the investors that have actually watched our videos on the Canadian Real Estate channel have executed on the deals that we're going to go through and past deals that we've gone through on other videos. Like this isn't just a fake list. This is real. Before we get into the deals, Andrew, just for your general knowledge, investors, general knowledge for Waterloo Region right now, you could pick up single family flips around 600K. Fantastic. That's about 100K cheaper than you could 2 months ago. Duplex conversions. 2 months ago, you were spending about 800 to 900K on a bungalow that you can convert into a duplex. You can scoop them up around 7-ish now. Beautiful. Multi-units, 750K plus. This is for something that's like a legal duplex or a legal triplex even. If you're picking up legal duplexes and triplexes around this price point, they typically have depressed rents, poor locations, or rougher condition, which could present upside for the right type of investor. But generally speaking, your duplex market's around the 750K and up. If you're paying that price point or lower, expect to adopt tenants that are paying poor rents or have a property you're going to need to update. But again, if that's the type of investment you're looking for, make sure your numbers check out and the value add adds the value you need, right?
Something just came to mind is the famous Warren Buffett quote of be greedy when others are fearful and fearful when others are greedy. And it just occurred to me that you say like you could pick up a flip for 600 now that was 700 before. And of course, a lot of people are kind of freaking out right now with interest rates and the looming inflation and stuff like that. And real estate investors are saying, "Oh, should I be buying?" And I'm going to say, yeah, because people are scared.
I think that if you looked over the history of investing, there are good deals in any type of market.
It's true.
There's money to be made in every type of market. You just may have to adjust your strategy. You may have to give yourself a larger margin of safety. You may have to take more risk. You may have to just wait and find a different type of deal. And I think that I'm a big Warren Buffett guy. I'm involved in the equity markets as well. I invest in that as well. His number one rule is not to lose money. And the quote that you just said is, be greedy when others are fearful and fearful when others are greedy. It's a great way to take advantage and accelerate either your recuperation or accelerate your growth coming out of, a transition market. Mm-hmm. So on that note, some quick deals, and we'll bring the video home real quick after this, Andrew. So stop me if I'm going through these and you have questions. Legal duplex, all brick bungalow, move-in ready condition, vacant possession available. Listed at 800K a week ago, didn't get offers, so they relisted at 929, expecting to probably get close to 900K. 900,000 for a turnkey, 3-bedroom upstairs, 2-bedroom downstairs, a vacant possession. You're making anywhere from $3,500 to $4,000 a month on a duplex like this in terms of your rental income, depending on the tenants, depending on the layout and the condition. This is in a great neighborhood, close to all amenities, walking distance to your bus, short drive to the highway and all your plazas, very rentable space, good long-term hold for anybody. If you get it around 900 or less, even better. Set your own rents, get your own tenants in there. Boom. Next, legal triplex, 919, offers anytime. Now you're saying, Zach, why would I buy a duplex for $929 when I can buy a triplex for $919?
I was just thinking that.
Reason being is you're going to have to adopt 2 tenants with this triplex that are paying below market rents. You get 1 unit vacant, right? Now there's lots of ways that you can increase the rents for already tenanted properties. This is a little bit of a better option for somebody that's looking for a more value add project or a longer term hold that's going to require a little bit more time and energy, right? You can get 1 unit vacant, update it, and raise the rents to current market rents. You're going to be making about $4,000 a month. After you do that, as you turn over the other tenants, your cash flow will increase. Purpose-built triplexes as well typically sell for a little bit of a premium. And for good reason. They're laid out better. Their mechanical systems are set up properly. They have the right parking. They have your separate meters, right? For long-term hold, it's set up a little bit better as an investor. But you're getting very similar cash flow to the duplex. You just have to adopt tenants that are already in there. So if you're not keen on adopting tenants or turning them over, getting a vacant duplex that's going to generate comparable cash flow and be hands-off for the next 10 years can be a comparable investment. Okay, duplex 929, vacant possession available. Oh, wait, one of our investors purchased it. Booyah. Sent this out on the investor hot list, took my investor to go take a peek at it, offered on it the next day, got it locked in on a conditional offer. Conditional offer, baby. So as an investor, having conditions can give you more time to do your due diligence, more time to double check your numbers. Got it under contract at the 875, vacant possession. This is a 7 out of 10 condition, detached legal duplex with a big backyard and parking, ready to rock and roll. 3 bedrooms upstairs, 1 bedroom in the basement. You'll cash flow about $400, $500 a month on this. Semi-detached duplex for those investors that are trying to ball on a budget, or a fantastic option for anybody that would like to live in one of their units. Basement tenant is paying okay rents. They're on lease until the end of this year. Upstairs unit, vacant and in good shape. Driveway needs to be done. As you can see, we got a little bit of the gravel section right here. So getting that cleaned up. Also, the backyard can use a little bit of love. There's some small things you can do to this home to raise the value as you live in it, or just let it be and let it cash flow like a beast. You can set the market rents for the upstairs unit, not holding off offers, open to offers anytime. Already previewed this one. Decent option for anybody. It is semi-detached. It is a legal duplex. But in exchange for that, you get it at a lower price point as opposed to a detached property. And then last but not least, for our flippers or the people that are looking for duplex conversions, look at that price. The king of Kitchener-Waterloo real estate deals, the duplex conversions, Aragorn resurrected back from the dead, is looking at deals at $600K for a duplex conversion. So we took 2 investors through this. One passed. It was a rough spot, Andrew, but if you're looking to flip, getting the rough spots are where you get a lot of the deals. This is a detached bungalow for $600K. Even if you spend $150,000 to $200,000 to convert it into a legal duplex, you're in a turnkey, brand spanking new legal duplex at $800,000. That would cash flow positive $500 to $800 a month.
Yeah.
Perfect. You're willing to put in the sweat equity. You're willing to hire a contractor, and you have cash to pay for the renovations. Fantastic option. Either flip it. We like the duplex conversion route because if the market turns for the better, or you can get a premium price for it, then you can sell it for a good profit. But if not, then you can hold it and have a cash flow positive property. And then you just wait out the market until you can sell it for what you want. So
multiple exit strategies.
Options and exit strategies are key. And that's something that you should be considering as an investor. But I wanted to just highlight this deal. We showed them to on Saturday. We had it offered on Saturday, signed, accepted Sunday morning with, I think it was like pretty much like 16 hours, start to finish, done. Like you got to be able to move quick, but there are deals. There's 2 other places, very poor condition, but like detached bungalows that can be easily flipped or converted into legal duplexes around the $600K mark in the last 2 weeks. Deals to be had. So these deals, majority of these were actually sent out to our investor hot list. It's a great way to monitor deals or to actively search. For our investors that are actively looking, we get them set up on a specific save search and then actually preview properties for them. So I know a lot of people, investors that are looking at this channel, they aren't necessarily from my local market. We pretty much look at every decent deal that we can get our hands on in our local market, whether it's a flip, a duplex conversion, or a multi-unit. So a lot of our investors can benefit from us previewing properties for them, right? Like if you have a 9 to 5 or you got kids, you can't come down on a weekday to go view one property. It's just not an option. That's just not good use of your time. So leverage the technology available. Look at the virtual tours, look at the videos that we can take as we go through it, or hop on a phone call with your real estate agent after they preview the property for you. This provides tremendous value as an investor, taking a lot of the legwork out of it and making you a decision maker as an investor. And that's something that we aim to provide to our investor clients, is putting them in a position to be the decision maker and focus on that. That helps them make the right decisions short-term and long-term.
Hugely valuable is to be able to, look at the pictures so you have an idea, but that somebody that you trust has seen the property, and you can't see the little details through a picture. And I find personally, like when I'm buying, that I can buy with faith that a trusted advisor has put boots on the ground. I can look at a few pictures and just say yes.
Yeah. And honestly, that's why it was a no-brainer to hop on the Canadian Real Estate channel too, was a lot of the people involved in this. These are other real estate agents and investors that are going out and doing it. I've gone out and I've done a few dozen of these deals myself and with my investor clients and my partners. Exactly. So I know when I walk into the property within a minute, if this is even worth me going through the rest of the thing or not. I'm checking the ceiling height. I've already looked at the zoning and the lot. I'm checking the entrances, the exit. What are the windows like? What are the roofs like? What are the mechanical systems like? What's the layout make sense? And you need to, if you're going to rely on somebody's advice, they have to be somebody that has proven that they have done these things with success, and leverage that, take advantage of that. So what we like to do is, first time we take out an investor client, do a big viewing session on a Saturday or a Sunday, go view a bunch of different deals in totally different areas, totally different price points, totally different styles that fit their criteria. So you can get that initial feedback of what they know, what they don't know, and what they like. Then from there, if I see one come up the next Monday morning, I know they're at work all day. Sweet, no problem. I already just go preview it. Sweet, I'll go take a look at it, then shoot them a message or give them a call. Be like, you know what? This one's not even worth it. Don't bother. Or you got to come look at it ASAP. Right?
Yeah,
got to be able to move quickly, baby. So in conclusion, Andrew, coming up next, Canadian Real Estate Channel videos, guys. We're burying multi-units in Kitchener. We have an awesome video. Peter came down and recorded a bunch of stuff with us. Myself and my partner, Matt, we went through a walk around for one of our properties. We broke down the numbers. We talked about what's working, what's not working, what the refi is going to end up with. And then we also went through a brand new duplex conversion that we've completed with a partner. Fantastic example for anybody looking to get into duplex conversions. And I got some really great feedback, Andrew. Last week when we were on with Adam, he mentioned that a lot of people need to see the numbers and how they're broken down. And they are so different from market to market. So what we're going to do over on the Phipps Brittain Real Estate channel is we're going to do a screen record of me working through a duplex conversion or a potential BRRRR project with the numbers and variables we use and a little bit of more explanation in depth. So this is something that'll be there forever. People can reference it. They can ask us for our Google Sheets if they want to use them. But just a really good example for people who need a little bit of assistance, just number checking. Because the reality is, if these numbers don't make sense, then really, what are we doing? So if these are videos that you guys are interested in, then like Andrew said, hit the subscribe button for the Canadian Real Estate channel. You can go check out our stuff at Phipps Brittain Real Estate as well. But these are the videos that we're going to be releasing specifically for Waterloo Region. And if you have other questions or concerns, you can reach out to Andrew. You can reach out to myself. All of our contact information and all of the links are going to be in the description. I know from my experience, interacting with Andrew, super realistic and just a really authentic person, somebody that's on boots on the ground, going out and doing work. And I like to think that myself and my team are similar. We want to provide value to the right people, and we want to grow long-term with all of our clients that are coming to us. We've had a lot of success, and we want to share that.
That's awesome. I feel like you just did my job for me But I'll say it again. If you liked what you heard, Zack gave us some really good information there. We had some awesome back and forth with questions. And if you liked what you heard, like, subscribe, and hit the notification bell. And we'd love to hear from you. So please do comment, ask some more questions.
Up, down, or the same. We've given our 2 cents, and I'll be in the comments for the next few weeks, guys. Andrew, this was a ton of fun. I'm super excited to follow your stuff. Just because the types of deals that you're into, I'm really into as well. But we'll be back, next month with another video on burying multi-units and doing duplex conversions here in Waterloo Region.
Awesome. And what's your handle on social?
Phipps Brittain Real Estate, and then I have my personal Instagram and Facebook at Zack Brittain, ZACK, and then my last name, Brittain. We got some good stuff coming down the pipeline.
That's awesome. And I'm Andrew Cox. You can find me on Facebook and everywhere else. It's Andrew Cox REI. Hope you've enjoyed your time with us. Thanks for spending a few minutes with us.
Yeah, thanks for checking out the video, guys. See you soon.